Investors are braced for another rollercoaster on Wall Street and other financial markets today. Catalysts for high volatility remain the same: political jitters, uncertain outcome of the midterm elections, the perfect storm in the crypto market, and the highlight of the day, the US CPI. InstaForex analysts have already assessed risks and made their forecasts. As expected, the US benchmark indexes closed sharply lower yesterday. Pessimism set the tone on Wall Street on Wednesday, so the major stock indexes halted the winning streak. The Dow Jones lost more than 600 points, or 1.95%. The Nasdaq incurred the heaviest losses due to global risk aversion and plunged 2.48%. The S&P 500 shed 2.08%. to close at about 3,748 points. Wall Street indexes regained their footing today in the New York pre-market. The three indexes traded in the green, regaining previous losses. The ongoing move is viewed as a correction after a steep fall yesterday. Today, sentiment on Wall Street depends on several driving forces. Each of them can trigger a new rally. Negative news could easily cause sell-offs of shares, so the S&P 500 might drop to 3,590 points. Alternatively, positive economic and political news could encourage its climb to 3,980 points. We could hardly expect a quiet session today. The stock market is weighed down by global risk aversion, the storm in the crypto market, and obscure results of the US midterm elections. Hence, under such pessimism, the market lost its gains achieved earlier this week. Today, US stocks are recovering intraday because the control over the US Senate is still in suspense, despite the fact that the Republicans are approaching the majority in the House of Representatives. Apart from the potential feud in the Congress, the market is anticipating the signs of a waning inflation. Amid such expectations, market participants are mulling over whether the US Fed will raise the funds rate by 50 or 75 basis points in December. Runaway inflation forced the US Fed to increase interest rates aggressively this year. As a result, the US dollar strengthened across the board. The firm greenback entailed massive sell-offs of US treasuries and shares across global stock markets. Nevertheless, global stocks have recouped some losses in recent weeks because investors cherish hopes that the US Fed could be poised to soften its extremely hawkish rhetoric. The red-hot CPI encouraged massive buying in the stock markets because inflation reveals signs of a slowdown in October. The annual rate of inflation in the United States has been easing for 4 months straight. The CPI slipped to 7.7% on year in October, the lowest reading since January and below the consensus of an 8% increase. Besides, the US CPI rose 0.4% from a month ago. The actual score is also below the consensus of a 0.6% growth. Still, the data is way above the Fed's target level of about 2%. Nevertheless, investors cheered the lower-than-expected CPIs, which in turn pushed market quotes up. The US dollar asserted strength on Wednesday. Everything changed today at the moment of the fresh CPI release. The US dollar index lost more than 1%, tumbling below the level of 110 points. The intraday corridor for the index is seen between 108.60 and 110.20. Later on, the risk of moot and obscure election results helped the US dollar as a safe haven asset, so its index rebounded and settled at about 111 points. Federal Reserve Bank of Minneapolis President Neil Kashkari supported the US dollar, saying that it's premature to discuss any revision of the Fed's current monetary policy, To sum up, the hawkish Fed is bullish for the greenback. The fresh inflation data revived hopes among stock investors for a dovish reversal in the Fed's rhetoric. The cherry on the cake is the weekly update from the US Labor Department. The number of initial jobless claims rose to 225,000 last week, 7,000 more than the revised figure of the last week and 5,000 higher than the market expectations. The USD pair traded higher yesterday on the back of the firm US dollar and a steep decline in the oil quotes. The currency pair traded at about 1.3523, and today market sentiment changed dramatically. The currency pair is expected to trade in the intraday corridor between 1.3340 and 1.3420. The benchmark oil grades slumped another 3% on Wednesday, thus dealing a blow to the commodity-dependent loonie. Crude prices extended their decline on a Thursday, following a losing streak for 4 days in a row. After the US CPI data, oil prices reversed their trajectory, neglecting the negative news on new COVID restrictions in China. The news is commonly negative for petroleum demand, but it was neglected by the oil market amid the signs of easing inflation in the United States. The loonie could find support from the Bank of Canada as the Governor Tiff Macklem is due to speak tonight. The developments in the crypto market on Wednesday were worse than the worst-case scenario. Bitcoin rapidly plummeted to $15,500, having passed the level of $60,000. FTX CEO and founder Sam Bankman-Fried told investors that the cryptocurrency platform is on the verge of a bankruptcy unless it obtains an emergency bailout. The firm faces a shortage of almost $8 billion, trying to raise $4 billion to keep its solvency. Curiously, despite the ongoing saga with the crypto giants, traders are clinging to the optimism US inflation data. As a result, popular tokens perked up. Bitcoin has been able to top the level of 17,000 by the time of recording this video, and it has regained more than 9%. Altcoins are trading considerably higher. The flagship crypto is likely to trade in the intraday corridor between $16,500 and $18,800. Based on the pre-market sentiment, our analysts foresee volatile and optimistic session. On the other hand, the market still awaits the final results of the midterm elections. Trade with the profits and check our TV channel for the right trading strategy, and see you online tomorrow.